So welcome everybody. Welcome to the chopping block. Every couple weeks, usually the four of us, now the three of us and a special guest get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. I'm going to go around. First off, we have Tarun, the Gigabrain and Grand Poobah Gauntlet. We have Robert, the crypto connoisseur and captain of Compound. There's myself, Haseeb. I'm the head hype man at Dragonfly, and we have today's special guest, Kyle, managing partner at Multicoin. I did not think of a clever
The
mute
master
intro
of
you would.
Multicoin.
Master
Master
of
of
Multicoin.
There we go,
I
there we
like
go,
the
there we go.
alliteration.
Also, the Sultan of Solana is another
I
name
like
we could
this.
give
Wow,
you.
you're really going for all in overlap there.
Exactly. All
buddy.
right. So very quickly, the four of us are early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Kyle, how are you doing, sir? You're the only one of us in shorts. Clearly, you are the Austin native.
It is 100 degrees outside.
It is pretty warm.
It's pretty toasty, so I'm in shorts and flip flops. Welcome to Austin, guys. Great to have an event here. I'm used to traveling for events. Welcome to Austin.
It's been insanely hot.
Austin's great.
Yeah,
In winter.
it is interesting. So consensus is usually in New York, which
Right.
like in the summer is like it's fine because it's mostly indoors. Doing a conference where you have to walk long distances to different venues outside in 100-degree weather is a very interesting choice.
Texas Ninja Warrior.
Yeah, exactly.
They should have done it a month ago, but yeah, June was not a good call.
Yeah, fair enough. Well, I know this is your home turf. You were just telling me about how you take a lot of your calls inside your pool.
I mean, it's hot outside, so
So
gonna
that's
cool off.
why your video's never on during Zoom. I see.
That's correct. Yes.
It's not waterproof, yeah.
That's
Yes.
right. Well, if you were wearing swim trunks as well, he might turn it on. But it's yeah. I mean, I can tell that Austin's been very good to you. You look great.
Thank you. Having
And,
fun. Y'all look great yourselves.
It's very kind of you. I don't-
Seattle's weather is looking good.
Yeah, it's all right. It's up and down. I've been traveling so much. Like I was.
Yeah, I was like, do you even live anywhere?
I know. It's been a lot, but it feels good to finally be in summer where, like, at least in a bear market, it can be warm. You can at least get a little bit of life in you. If it's just like cold and the whole market's collapsing, it's a little rough to take. But you were just telling me that you feel like people are way too somber about what's going on in macro. Why do you feel that way?
Yeah. So, I mean, I guess look at the last two recessions, 2000 and 2008. 2000 was more tech localized. In 2000, like the internet didn't really work super well, and like most people, like normal people, genuinely believed like computers and tech and the internet was kind of like meh. In 2022, there's actually 0 people in the world who do not believe that software is eating the world. Like actually every human in the world understands this now. And so like that's a pretty important thing of just like things will come back, at least in the context of tech. I'm not necessarily broader macro. And then second major difference is like in 2008, like people were like, is my bank going to have money in it tomorrow? And that was like a real question that people asked. Like there's no existential questions here. So like, I don't know, there's real growth rates going to slow down by 2 or 3% for 18 months? Like, okay, like sure. But like, that's like not that bad in the grand scheme of things. Like clearly March 2020 was a much scarier time because we were just like, I don't know, we're all going to die. And that was a question that people were contemplating. But like today, it's just like growth rates are marginally slower for some period. I don't know. It's just like, doesn't seem that big of a deal.
Well, how do you feel about the long-term impact of higher interest rates? Or do you think interest rates are not going to be maintained at a higher level?
I mean, look, we're at what, 4 or 5% now, which like, I guess relative to the last 2 years is high, but like on historical, like on any 30-year chart, it's like still quite low. Interest rates have been generally declining for like the last, I don't know, 100 years.
1,000 years.
Excuse me, 1,000 years, right? I don't think that like, maybe we just had the inflection point. The pandemic was the inflection point in that or something. I don't know. But like, I generally think the reason that's the case is as you democratize access to finance and access to capital, the universe of capital to invest in things is growing, which means rates of return are declining. And like society needs to find more productive ways to put stuff to work, money to work. And like the rate at which financial capital is being unlocked to invest in things is clearly still accelerating, and crypto actually is accelerating that. So like I generally think interest rates are still trending down in the medium to long term.
So you see pretty much all of this is like, hey, it's short term, it's transient. There's like this stuff going on in Ukraine. There's supply chain issues. There's China going offline. When all this is resolved, it's back on, and the party's going to continue.
Party never stopped.
Party never stopped. If you just come back to Austin, you realize the party's been going on the whole time.
I was amazed at the sheer number of people at this thing compared to the last one I went to. Like
The last
pre-pandemic,
consensus?
yeah.
How many people were at the last one?
Definitely not 16,000 or whatever the number that was claimed here.
Yeah, it's
today.
true. I mean,
Like-
permissionless was like 8,000, I think.
Was
Right.
it?
Yeah.
That did not feel like that big of an event.
It was pretty
Pretty
big.
big?
I think so. I mean, and then ETH Denver was like 15,000, if I recall.
Right. Well,
So-
I mean, they did take 3 city blocks of lines.
I know,
Like
I
that was
know.
crazy.
The hotel lobby could hold like 300 people.
It's amazing that there's more people at this conference than there are DeFi users.
That might be the reason why our portfolios are all down,
Yeah.
unfortunately.
Yes.
So,
Robert, fix it, please.
Wait.
I'm
the
working on it.
only thing crypto has the most product market fit for throwing events.
that may
It
unfortunately
might be the
true.
number one product.
You got to respect the people who like, look, bear market, bull market, they're always making money because they're throwing crypto parties.
Yeah.
And it's a good business. But speaking of which, I actually remember there were some folks during permissionless. So permissionless, it was a crypto conference that took place the week after the Terra collapse, and I remember, obviously, the whole world was like, oh my God, what is going on? Like, crypto's ending. People were there were talks about people killing themselves and people losing tons of money and whatever. And so it was a really somber time. And I remember permissionless was just around the corner, and I was slated to go, and one of our portfolio companies was throwing a yacht party at permissionless. And of course, like this stuff gets booked way in advance, and you have to do a lot of setup. And so they were telling us like, hey guys, we'd love for you to come to our yacht party. And I was like, dudes, it's like it's a bad time to throw a yacht party. Like, a lot of people lost a lot of money. It's like kind of a somber time for the industry. Also, like, if the press sees this, they're gonna have a field day with it. So like, I can already see the headlines. And they were like, oh yeah, Haseeb, that's a really good point. We'll make sure not to invite any press.
No one will
So-
post photos on Instagram.
Yeah, exactly.
No one.
And that's crypto in a nutshell. That's crypto in a nutshell. Which is why I respect the crypto party people, because they understand that that's what the true ethos of crypto is, just to have a good time
Nihilism.
wherever prices are going of a kind.
I'm just surprised we didn't see in the last cycle, we saw like, a lot of these kind of like mainly useless tokens like Brain Trust, not to single out anyone that's really standing out, but that where like they have some offline like event or labor thing
Yeah.
somehow tied, and like crypto somehow, even though the events keep going, there's no event token. No one has tried this like crypto event.
People
token.
have tried.
There's
Well,
a desk
counterpoint.
token here.
Proof of attendance tokens are vaguely event tokens.
That's true. But they're not like these like frenzy, Brain Trust was a frenzy for a little while before it crashed to earth, right?
Yeah, it hasn't been monetized so much. POAPs are a thing, but I don't feel like there's.
I don't
mania
think
around them.
Patricio would be happy if POAPs were monetized. I just
Mm.
Are POAP
philosophically-
soulbound? I assume they're soulbound. Or is that ERC not approved or EIP not approved yet?
I
No,
don't
not
think they're
even
soulbound.
close, not
Yeah,
even
I don't
close
think
to
they're
it.
soulbound.
No,
No,
I think Soulbound NFTs was a pretty poor choice of marketing. Personally, I just
Yes.
also I don't think the idea helps that much. But that's,
So very quickly define Soulbound. So Soulbound is an NFT that is basically not transferable. So you give it to someone and only that person can have it. They can't move it to another address. So why do you think Soulbound NFTs are bad marketing?
oh, I mean, you're just basically saying like, hey, why don't we reinvent identity, but call it Soulbound, which to probably like a ton of religious people feels like there's probably some religious person in the world who's like, that's a fucking attack on my religion because like your soul should be free, or like I don't know. There's enough people on this planet who believe in enough crazy shit that like there's gotta be
I
someone.
actually think it's great marketing because of the fact that we're all talking about it. Like there's a lot of blog posts Vitalik has written about that I've never talked about with anyone, but it feels like everybody wants to talk about Soulbound NFTs all of a sudden.
because they wrote this paper.
Right. But no, but also just like the idea itself is clearly interesting to people. I
mean, it's just such a simple
evocative.
idea. Simplicity is good, but like this is beyond. It's just like, of course, there will be NFTs that are not revocable and not transferable, and like I don't know why that concept needed more explanation or thinking.
Well, I think they also have some like voting component to it where it like has some notion of quadratic voting built in, which I don't totally understand because there's not a fungible token attached to it, but it was like a way of like if you use them in accord with in conjunction with the fungible token, you could somehow get some
Right.
There was like the main thing was like to prevent Sybil attacks and these like Gitcoin-like systems, right?
Yeah.
Because there's tons of that. I mean, Gitcoin in
Yeah,
general
obviously.
and so I think their application was for that, but then of course it mainly was portrayed as like non-transferable NFT. Well, yeah, no shit. Everyone who said the word DID, which is like Bitcoin maxis and Microsoft. I don't know if you remember the like DID spec, that was through the digital identity spec, which would like write like some amount of data to Bitcoin like every 100 blocks. It's never happened, but that thing is a soulbound NFT.
Well, I think people forget that addresses and private keys are transferable. We brought this up on the show like 3 or 4 episodes ago when we were talking about the ApeCoin land sale, and people were buying other people's addresses in order to participate. Private keys are easily transferred. Like, I think soulbound is a crazy term because it's not actually bound to an individual; it's bound to an address, and addresses are more transferable than people think.
True. That's true. At the same time, like, I mean, I don't know. I find it hard to get worked up over these things because I'm just like, look, if soulbound NFTs are a good idea, someone will find an application for it and we'll all benefit from it. But probably we're not going to be calling it soulbound NFTs. We'll just be like, oh, that thing that we all use.
I mean, I think the average user will see it from something like Gitcoin, where it's like, how do you distribute funding in a way that's like not whales taking advantage of it?
Right, but I think it's pretty clear that, like, look, if you're going to create an actual KYC solution, it should not be soulbound because people rotate addresses, right? Or people have multiple addresses, or they have multi-sigs, or they have whatever, or they lose an address, and then they're like, okay, well,
I
I still exist even though I lost my address.
I think the argument is like, you have to build up reputation to that particular address.
Right, but I think clearly like the right notion of identity, that is the notion of identity we're going to be using in 15 years on chain, whatever the hell that looks like, clearly will be able to survive losing a private key.
Yeah.
Right. So if your idea of a soulbound NFT or identity is that it is tied to one private key forever and you build it up over 15 years, that's just not going to work.
Yeah, that's true. I assume it's just going to be some weird Oracle service like Sealance. Something like Sealance. So Sealance is this like Matthew Green, this like cryptographer from Johns Hopkins.
Yeah.
It's like a KYC ZK KYC solution where like people can verify like some subset of facts.
So they can selectively prove.
Yeah, they can selectively prove certain types of queries.
Right.
About like off-chain attesters, like the DMV or something, right?
Yeah.
This type of stuff seems way more close to actual like identity than any of these NFT.
Yeah,
things.
Certainly. So okay, I want to jump into the meat of things. So first off, is that I've been informed that there's a long-standing beef between Kyle and Robert. I don't know the nature of this beef, but I'd love to uncover some of the some of the pain that's been scabbed over.
When he mentioned to me before the show, I was like, "What is he talking about?" And it took me like 3 seconds for it to even come back.
Robert knew. Robert knew.
I mean, you want to take it away, Robert?
I feel like Haseeb is trying to create drama on the show to get like clicks.
we need ratings. We need ratings.
Yeah, we need ratings.
We need
Okay,
ratings.
the viewers, I can see the view count. It is going through the roof right
We're going
now.
from 5
It is
to 8
working
in real time. No, the only possible beef is that, very early on in DeFi, when Compound was one of the very first apps, no one knew how the industry would unfold. No one knew what would work and what would not work, and what the final form factor would be. In fact, we still don't know what the final form factor for DeFi is going to be and like how it's going to work. But Multicoin had, 1 or 2 ideas that Compound was not going to be how it works.
We invested in DeForest. This is actually, I think it was like March 2020. It was like right around the time of pandemic starting. And the DeForest team did fork Compound V1. There was a bug that was exploited shortly thereafter based on some, I forget, token contract spec bug.
ERC7.
Tokens are complex.
Token.
Right.
Yeah, I am token.
The
Yeah.
modified
BTC,
transferable
I'm BTC,
function.
Yeah, so we did fund them. Our thesis, we put it on our blog. It's still on our blog, so go check it out 2 years later. But basically, it was like a Chinese super app was basically the thesis. And we had a view back then, and I still think we hold today, that generally like Americans will not build stuff that Chinese people interact with, and Chinese people will generally not build stuff that Americans will interact with. I think that's generally consensus-ish. Not strictly true, but generally true. And so our view is like, these guys are going to go build stuff for Chinese retail. Obviously, didn't work out super well, and Compound has thrived. And also, there's like 50 Compound forks now.
Yeah,
So you guys have great coverage.
50 a month.
Yeah.
Okay, well, I guess you guys.
We-
met
we-
in
we
the-
started-
That
we
was very
started-
sweet. I saw just a little spark of love.
There's always
Going
been some
across the
spark of
table.
love here.
There's always been, and like I want to say it was probably 9 months later or something. You and I started to re-engage on Telegram or Twitter or something, and
Yeah.
so like it's fine now.
Crypto's a small space when you really boil it down.
Yeah,
It's true. It's true. And I feel like Kyle, you tend to have run-ins at some point with almost everybody in crypto.
everyone.
Yeah, there's like almost no way. I mean, you've been doing this so long that
I'm just a boomer now.
you are. I mean, so I think all of us at this point, like once
All
you
these
once
gray
you
hairs.
yeah, like once you stop shaving for these things, that's how you know that you're like last gen.
Yeah,
So that's I guess I'm the only one to try.
Yeah, you're-
And now that they're actually looking at, I'm like, shit, I actually shaved this morning.
Are you Zoomer Gen? Which Gen?
I'm trying. That's why
Gen Alpha. You make it there.
I'm working on
Would
it.
you do you agree or disagree with the following statement? Fashion NFTs will be the future of fashion.
I don't even know what that means. I'm trying to like parse that statement, and it's not.
I'm just telling you that like
False.
there's so many people who are like arguing that or like so many people. It's not so many people. It's like
Yeah.
not it's some weird niche Zoomer thing
I see.
about like their metaverse character having like
I think it will be true
clothes that they-
to some extent. I think it will be true to some extent, but not.
that
not
I view the
completely.
answer to this question as the categorical divide
Oh, that's
between
the
boomer
divide.
and Zoomer.
Okay. Fair enough,
Like-
fair enough, fair enough.
I like this litmus test. It's very, very
Yeah,
clean.
No, it's true. So we were also we were supposed to get Anatoly on the show, and Anatoly wasn't able to make it because he's in Korea doing stuff. So Kyle, obviously, you are the seed investor in Solana. You are known by many people as being the first investor to kind of throw your weight and throw your
No
kind
tattoo
of
though.
intellectual force.
No tattoo yet.
Well, that we can see.
Yeah,
that we can
yeah,
see.
yeah,
Unless you,
I
if you
can-
go to his pool
I
parties, you
can-
get to see the
I can
tattoo.
see
But
the-
otherwise,
yeah.
we don't get to grace our viewers with that quite yet. So we naturally had at various times on the show we've been critical of Solana at times.
Hey,
occasionally,
I've
very
been-
rarely.
I, for the record, am the one who is always like making sure that these kind of very like X is always way better than Y claims are hedged.
To be clear,
mainly a seed.
I think Solana is awesome. We've made a lot of investments on top of Solana, but I also think it's made a lot of mistakes that it's now paying for. And one of the obvious components of that. So I think we had Andre on, like what was it, a month ago? I think we had Andre on, and Andre basically made some claim about Solana that Solana's not even a blockchain; it's just like a database and blah blah blah. And so we were like, okay, we should bring on somebody who's pro Solana to go and give the counterpoint. I don't necessarily need to respond to that because it's obviously kind of an outlandish claim, but in the last, part of the storyline about Solana, so Solana obviously is down alongside everything else. It's down quite a lot from the peak. It's down, it's like $30-something now, and at the peak it was like 240, so it's down what 80+%,
In line with the market.
in line
Yeah,
with
that's the market.
the market. And most alt L1s are also suffered roughly the same fate. The thing about Solana though is that it's had very, very spotty uptime. So this year alone, my understanding is that we've had 12 periods of downtime in this year, and it's June, so basically about twice a month. And the most recent downtimes, just to give the TLDR, there was basically a bug with what's called durable transactions on Solana. And so durable transaction is when normally on Solana, when you want to use it, send a transaction, you don't use a nonce the way you use on Ethereum, which is like, this is my first transaction, this is my second transaction, this is my third transaction, so that the blockchain knows, even if it gets it out of order, what order in which you intended to play these transactions. In Solana, what you do is you specify a particular block, and you can only sort of do that once. That's how you dedupe transactions to make sure you don't get repeats. But if you're offline, if you're like in cold storage and you're like in a clean room, you don't know what the last block hash was, so you can't include a block hash. So Solana has a mechanism for you to do what are called durable nonces, which is a way for you to like sign a transaction in a clean room, take it out, even if you don't know what the state of the blockchain is. Now, there was a bug in durable nonces which caused consensus failure in Solana, and it went down for like 6 hours or something. Solana's back up. They disabled this feature, but by disabling this feature, they plan to reinstate it once they do the next upgrade. But by disabling this feature, that caused most of the custodians that actually hold Solana in cold storage and do this kind of clean room shit to be unable to move Solana anymore. So like Coinbase Custody, we got a notification that I ended up posting on Twitter that Coinbase Custody can't move Solana. They can take Solana. They can't, Solana that's staked is still being staked, but they can't move it. So your
Right.
Solana is now stuck if it's in a custodian or in a similar environment where you need durable transactions.
Is that bullish?
Yeah, if you can't sell.
Like, you can't
can't
sell.
sell.
I mean, you
Yeah.
can. I mean, you can short. So you can at least, if you feel like it's not a blockchain for you, you can remove your exposure to it. But yeah, I'm curious to get your take on the situation about the stability of Solana that we've seen this year.
Yeah, so I'm going to zoom out and provide a different framework on how I think about this problem. So Bitcoin, the ideology that has driven Bitcoin for most of the last 10 years has been fairly libertarian, digital gold, almost pseudo-anarchy kind of a thing, right? And obviously there was the block size debate in 2016, 17, and the obviously small blockers won, and like really strongly reaffirmed the like very conservative roadmap, change nothing, no hard forks, etc. Ethereum is not as extreme in like that hard incentive beliefs as Bitcoin, but is like directionally aligned with like, slow changes, very slow, like don't break it. Like, I think actually the litmus test of like the Ethereum ideology is assume all the core developers die today, every single one of them everywhere in the world. The system has to run in perpetuity, right? And I think that's kind of the bar that they hold themselves to. And every time they release an upgrade, they kind of operate with the same assumption. Um, I think that's like one of the core kind of ideological differences is like Solana's worldview and Anatoli's worldview is, look, it's going to take us some number of years to get to where we want to go. Just get there as fast as humanly possible, and like make a bunch of mistakes along the way. It's fine, but like don't assume that the entire engineering team will die in 24 hours. And so I think that's kind of product management ideology difference A. I think that B is kind of like diving down a little more narrowly is, when I was obviously pretty close with the Solana team as they launched 2 years ago. And when we launched blockchain, the concern was no one will ever use this thing. Like that was by far the most important concern. And like when they launched it, like there was a bunch of known stability problems and like they worked through most of them. There's obviously still some other stuff they have to do. But like once the blockchain was generally functioning, their priority of the kind of all of the people there was to drive usage, and started working with the Serum team and did a lot of DeFi stuff. The first few hackathons were all very DeFi oriented and building out whatever SPL stuff and whatever else they had to do. Then they turned their energy towards Metaplex and NFTs and did that, spun out Metaplex. Then they did Solana Pay. They have a couple of other cool new projects they're working on, but like they've generally been expending their resources explicitly on trying to drive growth to get people to use the blockchain. Inevitably, as you drive people to use the blockchain, they will use the blockchain, and like inevitably things break. Right, like generally in the history of software, every time you scale a system 10x as a rule of thumb, something breaks somewhere. Reads, writes, stability, whatever, right? This is kind of like a known thing. So, I think what you're seeing now is you're seeing the cost of the decisions that were made over the last several years, which was prioritize growth over like known, but like they knew they needed to do fee markets, they didn't do them. The durable nonce thing was known several weeks before it happened to fail like a few days ago. So like these were known decisions that were made ahead of time, consciously.
Hold on, but I'm pretty sure that Anatoly has argued with me on Twitter that Solana should not have fee markets.
I mean, fee markets are shipping like now-ish.
No, I know. Like this, because they faced a lot of criticism about the lack of fee markets. But like for a long time, this was an intentional design choice. It's not like oh, whoops, we forgot to ship the fee markets.
Right, but like they changed their mind, like okay, like we need that fee market, so like go.
right. No. So I mean, clearly Solana is adapting to the fact that like, hey, there are these. We're seeing the way in which this thing is breaking at the margin.
Yes,
and we need to adapt around it. But
correct.
The story that you're telling is one that like, look, we basically move fast and break things.
Yes,
we're intentionally prioritizing adoption over stability.
Yes,
but it does seem to me like this also is not just a story about usage. It's definitely a story about usage in that there are a lot of blockchains that exist today that have, hidden like sort of, weaknesses that will only be exposed when they face really serious usage.
Yes.
And, a lot of things are going to break when they receive the kind of load that Solana receives.
Yes.
So I think that's definitely true. And
Yes.
I take your point on that. But it also does seem true that Solana is probably breaking more than it should.
Yes.
That also seems true.
Yes.
And I'm curious if you have I'm curious. It seems like you agree with that.
Yes.
Why do you think that is?
Yeah. So one element of problems emerging in downtime is usage grew, and that caused you to have problems. But the related part of and the point I was kind of getting at was like for the last 2.5 years, the primary engineering resources have been there's a bunch of known things they want to do to improve stability and fees and whatever, and they just said kick that can down the road. spend energy on trying to drive growth. And so it's just been like a very conscious decision of focus on getting more people to use it, instead of going after known bugs. And like, quite frankly, I agree with that decision. I think that was absolutely the right decision. You can argue that today it maybe no longer is the right decision, and like that's a pretty reasonable debate to have. Obviously, you have to play out lots of counterfactuals of how the world works out, and those are difficult to reason about. But certainly, at least for the first 18, if not 24 months after the network launched, which the network is 26 months old, like I think absolutely it was the right decision to focus on growth.
I mean, it's clearly succeeded, right? I mean,
Right, yeah.
Solana is obviously extremely valuable. Tons of people use it. It's one of the few things that people even know
Yeah,
as layer one blockchains besides Ethereum.
yeah. So again, like this comes back to the core question. Actually, you kind of alluded to with Andre too, of like, what's a blockchain? And like, again, if you assume the entire engineering team will die today and the system must run in perpetuity, if that's your definition of blockchain, then Solana is not a blockchain. But like, that's fine. Like, that's just not a useful
But
definition.
what do you mean by that?
Like, I mean, again, like, if Ethereum today, if the entire EF and core teams and all the teams around the EF, assume all of them disappeared right now.
Yeah.
Ethereum in its current form will run probably in perpetuity.
Yeah, so I understand that point. I'm saying, why would you say that Solana is not a blockchain if the devs die?
Like there's a bunch of these things. The fee markets are not live yet, right? Like, there's a bunch of things that they know that they need to get working to scale this thing.
The blockchain will stop in like 2 weeks.
Whatever, something will go wrong,
I see.
and like it will stop working, and but I think that's okay. Like, fix the ship. The corollary to Ethereum is like, yeah, okay, you have a thing that doesn't go down, but also like there's still no. It's been 7 years, and like, is the scaling stuff going to work? Like, I don't know. Like, so you'd have to take the other side of the same coin, right?
Right.
This is a trade-off for almost every project in some form between the ability to evolve versus stability. And you see it with Solana, you see it with Compound, you see it with Bitcoin. Every different project ever makes some choice of where it wants to be on the pendulum. And sometimes it's the right call, sometimes it's the wrong call. I think Compound doesn't move fast enough because it's more stable and more resilient than possibly the market should be. Solana is more flexible. And we'll see what's, the right decisions are.
Yeah.
No, I mean, look, I agree with the core point, which is that all this stuff is it's trade-offs all the way down, and there's no free lunch that you can get. You can make the best calculation that you can, but eventually you have to pay everything down, right? So you can cut some corners in order to get faster performance, better go to market, better growth, but you have to pay everything back at some point. The question is, what's the price when you have to pay it back?
Yes.
And when you become really big, of course, the price becomes significant because when you're a small little blockchain, people don't really
care.
They don't really care if you're down for a little while. When you're one of the largest blockchains in existence, which Solana is today, of course, it's disruptive to a lot of DeFi. There's a lot of TVL. There's a lot of oracles that go down. There's a lot of blah blah blah. So the disruption becomes bigger, and that you're right. It is tricky, and we're not going to know for another 3 to 4 years what the record is going to show in retrospect. But one of the questions that we got on Twitter was actually asking you about your investment into Aptos.
Okay.
So Aptos, for just a very quick TLDR, Aptos is one of the blockchain teams that spun out of the ex Libra / Diem / whatever teams. They're basically building the blockchain that Facebook was going to build, that was going to be called Libra, took the tech, are improving it, and they're going to launch their own layer one blockchain. It's intended to be very high performance. It's similar in principle, at least to Solana. So what the kernel of the question was, one, what motivated your investment into Aptos, but the kind of the direction that I'd want to take it is, do you think the exact same things will happen to Aptos?
Cool. So I'll answer the latter first. Yes, generally. Aptos has the luxury of like, they just had an enormous engineering team with effectively unlimited money for quite some time. That probably will be good for just like fewer problems down the road. Solana and before the network launch, like those guys were running out of money. Like we let us around to like keep them alive. Obviously they didn't have that problem at Diem. So they have some luxuries there that are likely to pay dividends in the future counterfactual cases of things not going down. But directionally, I'll make an extreme statement. Every single layer one or layer two, without question, will go down substantially both on the writes and the reads over the next several years as they try and scale. Something will go wrong in the provers, something will go wrong in the sequencers. Like, it won't just be even RPC layer. Every single one of these things is going to have very embarrassing face flops in some form or fashion.
Totally agree. By the way.
because like scaling reads is one thing, and that's kind of RPC side, but scaling all the writes is like a whole separate set of problems.
Yep.
Comment A, or actually that was question 2. Question 1: why did we invest in Aptos? The answer is like we like that it looks like Solana. There's all this talk about modular blockchains and L1s and L2s. I don't think L2s have a place in the world, and I think they will be used for some stuff. I am quite confident L2s are not the savior to everything. And so generally I want to maximize throughput at layer 1. And then we'll see what L2 stuff happens. But like, so the comment A, and then comment B on why we did Aptos. I think one of the things that helps Solana be successful is that it has a unique programming model, and has Rust. Although knowing Rust alone is not enough to program in Solana, you need to learn the Solana account systems and data models and whatever. But like, one theory I have is that being an EVM chain is actually value destructive, because people just copy paste code from ETH layer 1 and paste it in new places, and you don't get truly organic developer communities with real intellectual capital forming and building. Solana, you had to have that happen, and they took some set of opinions and trade-offs and whatever, like how the system does stuff and compute and whatever. And Move is taking a new set of differentiated opinions on like how the core programming model should work. I actually don't know if those opinions are good or bad. I don't actually care. What I care is that they're different, and they seem to prioritize safety and like making it harder to write bad bugs. It's pretty clear that like as crypto enters mainstream, more and more developers will be writing smart contract code. A lot of those developers will be scared that they will write the line of code that causes a $500 million thing to blow up, and like no one wants to be that guy. And if there are people who credibly believe that this development environment is more likely to have safer code, a lot of people will be attracted to that, even if the claim itself is actually somewhat dubious. And again, I'm not making particular claims about Move versus EVM versus Solana.
Yeah.
But like they lean into it, they talk about it. There's a bunch of academics talk about it. I think the claims are generally accurate. And
Well,
I think
Tarun, I remember you were one of the co-authors on one of the Libra papers. What's your
I was one of
take?
the reviewers. Yeah, I mean, I think as a language, it's like really well designed. I generally think, however, that like I'm from my perspective, it's more like I think the language is great. I don't see that as that much of a moat, perhaps. I think in Solana's case, actually, there was more of the, as Anatoly would say, chewing glass effect of like the account system's fucking hard to deal with. Like, oh, when I run a validator, I have to figure out how to do kernel bypass. Like, there's like all sorts of like very annoying shit like that. Whereas I kind of feel like Move doesn't have as much of that. I feel like the place where you see that happening is Starkware. Starkware has one of the most hilarious programming languages because it doesn't have strings yet. So you can't even print a fucking error message. Just like think about that, right? Like you have to be really like assembly guru who like can't tell what the fuck's happening ever, and in order to really write stuff there. And like I think the ZK stuff will be a little closer in my mind to the Solana kind of ethos. I actually think Move is relatively easy to write code for. I do think people though in these kind of like overly typed systems, it's very hard to get. It will have a little bit of the Cardano slash, Cadena, etc. problem of like you're getting people to learn this like sort of functional language. It has like sort of weird semantics that like don't match like whatever your apparatus is around it, which is like TypeScript or Python or whatever, right? So in my mind, I guess that would be more my claim. I think like people like the challenge of Solana, whereas I feel like Move is like a very different subset of people who would be like find that challenging, and I don't think those people are very good at DevOps. And like Solana really attracted these people who are like, I love 99% uptime. I'm like, who the fuck are you people? Like, I don't want to be on call 24 hours a day. I don't know why you do, but I feel like Move is more like it's like the OCaml like functional
Yeah, it's very
programming people
functional.
love
Yeah,
it.
like the
So
Haskell
like
people.
I do think there is like cultural differences I see. At least that's just from like the technical side.
I like Ethereum because I don't think there should have to be DevOps for writing applications that live on a blockchain. Like I think when things are good enough, like you don't have to worry about DevOps or uptime. Like
The layer 1 people do though. Geth developers do.
Geth developers do, right?
Right.
But like the application layer should
Separation
be,
of concerns.
right.
Right. In Solana, though, in the beginning, until Anchor really like started to mature, you basically didn't have that separation of concerns while you're testing. And I feel like that attracted a certain type, like it, no matter what you can say, it's like it attracted the type of person who'd want to be a Geth developer.
There's a kind of masochism that sounds like forms an early community,
It-
like people who go through some shit together.
you need something there for whatever it is. In the case of Solana, though, I don't think on a go forward basis the core of it is the chewing glass thing. Although Anatoly leads into it and I like it. I think what matters is it's a different development environment with some unique set of ideas and trade-offs in the programming language and whatever. Like there's JavaScript people, there's Python people, there's C++ people, there's Rust people. Everyone gets trained on whatever they got trained on. They have some set of biases and beliefs in how they think computers should work. There's interpreter code, native code, right? Like all this. And so I think the idea of like EVM homogeneity that's the crazy idea. Like you just need to have some different new ideas and models. And I think Move will be a pretty meaningful benefactor from like the world wants some degree of heterogeneity of just different stuff.
I think that's definitely true, and there are real trade-offs to the obviously the EVM is, kind of it wasn't even designed by committee. It was designed by like one crazy person on a bender.
Yeah.
So it's like it's a very
One crazy person who disavowed his creation like
Yeah.
very soon after. Like, come on.
well, so it's it's a complicated origin story for like the biggest smart contract platform, by
but
market cap.
it works, and it's a
It
shitty
does.
format. But like VHS versus Betamax, like the best format doesn't always win.
yeah.
And like in a lot of ways, I think EVM is winning in its own way because like it's becoming a format that any blockchain can adopt to have an ecosystem basically out of the gate.
Look, I 100% believe that, and I would take the opposite of the claim that you made, which is that look, the problem with launching a chain with an EVM is that people can just copy and paste stuff, and they're all lazy, and nobody reinvents anything, and that is actually like that's why GitHub exists. It's that you can just copy and grab some other guy's thing and then put it on your thing and say, like, great, I'm going to remix it and add something on top. That's like what created internet culture is the ability to do that, which was extremely difficult before the advent of the internet. Now, of course, that means that there's going to be a lot of lazy copies and a lot of lazy forks that don't do anything, just as there are thousands of forks of every major project that no one cares about and no one needs to care about. Like the waste bin can be infinitely big, which is the beauty of software, is that we're not taking up resources by trying to create another chain with another EVM instance that doesn't end up going anywhere. It's totally fine. No resources are wasted by doing that. But the one person who creates an amazing EVM chain that has some great, novel idea in it or some great application can get a bunch of adoption, have a bunch of tooling, have the collective intelligence of everyone who's been working on the EVM to civilize this otherwise really awful virtual machine into something that feels usable and feels safe and feels predictable. That is really powerful. And it happened already to JavaScript, right? JavaScript is a horrendous language out of the box, but we've turned it into something like fairly civilized and fairly usable and really, really freaking performant.
There's so many functional programmers who are the type of people who love Move, who are tisking at you.
let them tisk. I mean, it's the most popular language in the world.
I think that I do agree though with Kyle's point that like people like the heterogeneity because like somehow you want to like developers love that, but I don't think like users love that. That's the
of course, I mean it's opaque to users.
The users want their wallet experiences to be homogeneous. I actually think they don't like
Correct.
too many weird UX and like that. I don't know how to reconcile like the user side with the dev side. The devs are the hipsters. The users are like I don't know, like
Mainstream.
They're normies,
mainstream, and they
yeah.
don't want to like keep mixing UX. And I feel like ETH did set the standard for what the UX should look like, and now so there is some weird thing that I can't kind of reconcile there personally.
Well, so okay, let's shift subject. So there's been interesting development lately. Kyle, you were talking about that you don't believe L2s are going to be the savior. Well, so there was an L2 savior moment last week. So Optimism, which is right now in the spotlight because they're a layer 2, an optimistic rollup on Ethereum that recently launched their token, Optimism, OP token. There was this token was supposed to get distributed to a bunch of early investors as well as partners. One of those partners was Wintermute, which was a market maker. And so the story goes that Wintermute was supposed to receive 20 million OP tokens to like market make and do stuff. And Optimism was like, yo, here are your tokens. Wintermute was like, cool, we got them. And it was supposed to be a Gnosis save, a multi-sig that was deployed onto Optimism. However, Wintermute never deployed the multi-sig. They had the multi-sig on Ethereum, and they assumed that they could later deploy it to the same address on Optimism, but it would be good. That's the address, and like obviously nobody else can like become our multi-sig. Well, it turned out they were wrong. Someone else could become their multisig. And in fact, that's what happened. An attacker deployed a contract to the address that was otherwise going to be the Gnosis safe for for Wintermute, and took their Optimism tokens, as well as a bunch of other random Gnosis safes that were also eligible to receive Optimism airdrops. The reason why this happened was because of some subtle things around opcodes, and basically they didn't deploy their Gnosis safe in the way that they ought to have, using whatever Create 2, which is a more deterministic way to deploy addresses that have the parameters in there so that you know who the owners are before you deploy it. The attacker was then pressured by a bunch of people of like, hey, so they stole like 20 million, I think, in OP tokens. And the attacker, apparently they sent a message to Vitalik.
Vitalik.eth is the ultimate Ponzi scheme. He gets like tied from every single attacker.
That's right.
Like it's
So-
like insane.
So he sent a message to Vitalik in like the little, the what's it called, memo of the transaction, saying like, hey, Vitalik, what do you think I should do? Or something like this. He was like asking Vitalik for advice on how to deal with this situation. And so what he did, as presumably penance for his sins, is he sent 18 million OP back to Optimism to return the funds. He sent 1 million to Vitalik for who knows why. Maybe Vitalik will return it, maybe he won't, I'm not sure. And he kept 1 million for his troubles.
I mean, I think part of this was a little bit of like an edgelording move with the Vitalik piece, because Vitalik's, I wouldn't say he probably would disagree with this characterization, but I would say his layer 2 of choice, the one that's blessed by him based on amount of interaction and talk about it, is certainly Optimism versus, say, Arbitrum. And I think the idea that like this type of thing happened on the blessed so-called L2 was like a way of like giving a middle finger.
that's definitely possible.
It feels like that. Like even the note, the way it was written, was just like so trolling. Like,
Yeah, I mean, we're seeing though. I mean, we've talked about this before. Like this trend of people giving back hacks happens a lot. Something tells me it's not because of a guilty conscience that we keep seeing these hacks returned. I assume it's that like there was no way for this guy to liquidate 20 million.
I mean,
dollars.
chain analysis is actually pretty. So there's another attack last week, which is Osmosis had this huge bug. They got the validators to actually halt the chain, and it's still halted until they fix this thing.
They had an event here as well. They were like partying while the chain was down.
I mean, you already like you said, you are once
Chain down, party up.
Yeah,
That's crypto.
Yeah, finally we can relax.
Yeah.
It's great.
But it's like I in general I think they already rescheduled everything. Like, I spoke at this conference, so like I
Wait, you were there?
Yeah.
What was the vibe at the the Osmosis conference?
not somber. Not happy.
Okay,
Not
okay.
somber.
There was no one busy in the back room being like, "Yo, we're turning it back on. Don't worry."
Just don't invite the press. You're good.
Yeah. There you go. Yeah. No, I think that the main thing is the person who did that wrote this tweet apologizing publicly, and I was like, wow, did the team like convince you to do this? Where it was like, because it was a validator who was publicly known and they didn't have anywhere to go, so it was like pretty easy to see.
They
And
turned $200 into 2 million.
I think they ended up doing 5. I think someone wrote the description of the attack as 200 to 2, but the transactions, I think they actually got 5.
5 million.
Yeah, and
Okay.
so they, but then they wrote this thing, which was like the most hilarious thing you can read on Twitter. It was like, "We're so sorry. We did this because we really wanted to take care of our families. But sometimes we have temporary lapses in good judgment." And I was like, "That's amazing. I'm never gonna say I have bad judgment anymore. I'm just gonna say I only have temporary lapses of good judgment." Like it was like,
I was just drunk one night and like
I broke the whole chain.
Yeah, I broke the chain thinking of my family.
but
and,
at Osmosis conference, I did learn a lot, which is chain analysis response time is like under an hour to like find on some of these things.
when you say their response time, like to do what?
Oh, like you tell them there was like an attacker, you show the addresses,
And they like fan this out to all the exchanges or what?
oh, as in like they
just track the flow
they
funds.
track the flow funds
Oh, I
and
see,
like
I see.
have some ID.
I mean, it couldn't have moved that far.
You're right. Well, you have IBC, so you could technically have gone somewhere
right,
else.
okay,
But
all
like
right,
you
all
could have
right.
gone to Evmos then to ETH. That would have been
Oh, I
now that
see.
Luna's gone, there's no way back to ETH other than through Evmos.
I see.
So,
I see.
but yeah, so I thought that was like kind of an interesting thing, and so I think it is actually just like the chain analyses are way better than people realize.
Right. Right.
That's like the majority of it. And then it's like, oh, it's a known person. So then like they get a threatening email that's like
So with the osmosis one, it doesn't surprise me that like, look, you're doing this in plain sight. Everyone knows who you are. You run a business. You're part of the community. Like, where are you gonna go on osmosis to hide?
It's pretty stupid. You should have said, "Hey, Sonny, we found the bug. Please pay me $100,000 bug bounty."
Yeah,
like,
exactly.
what are you doing? This was
Well,
clearly the right way to handle this.
look, it's yeah. Look, I'm sure he has a big family, but in
and many lapses.
yeah. But like at least in optimism, like it seems like optimism, it's like fairly liquid on chain. Like you could just sell it, turn it into ether, and then go, take it to Tornado or whatever. I mean, there's ways to get rid of it. I'd assume. So I was surprised that they gave back what was, I guess, worth like because $2 optimism token.
I think it's
So-
like 80 cents now.
Oh, it's
Yeah.
80 cents. Okay, never mind. All right. I guess I give that back too.
Disclosure or optimism investors.
Okay, there you
Rob-
go. Yeah,
Robert
okay.
and I,
All right.
so,
So yeah, it's 80 cents. So that would be what, like 15 million,
yeah.
14 million, whatever, something like that. They gave back. So yeah, it seems surprising to me, which tells me that maybe I don't know if it's honor or if it's just like they're not financially motivated to that degree.
Yeah, I mean, my sense is like someone had the stats on this, but something like I think 20, maybe 40% of all the ETH in Tornado is like known to be stolen funds. It's like a huge percentage, and so I think a lot of people are thinking like Tornado's not going to help me because just assume everything's going to blacklist it out. Like, yeah, that's a high enough percentage that like, how much plausible deniability do you have? If it's like 1/3 chance. I don't know. It's like
Well, you could always be a beta tester for Aztec whenever they launch.
whatever they launched.
But,
They
like,
just
next week,
launched something
so-
like a day ago.
Yeah.
No, they unlaunched because
Yeah, I think it's next week.
yeah, they unlaunched because they had some
Unlaunched.
issues.
Is that a phrase now?
Unlaunch.
Yes,
Well,
exactly.
Jason
That's a great
Calcanis
name
has
for
his launch
protocol.
conference. You can also have an
Yeah.
unlaunch
There
conference.
you go.
as
There you
Well,
go.
I
There you
think
go.
unlaunch protocol would be hilarious.
I guess
where it, like,
osmosis
it, like
is
deprecates
unlaunched.
your already running protocol
Yeah,
in like
yeah.
emergency.
Well, all right.
But also one other thing about this is like I think this does to our earlier conversation about like non-native, like non-standardized languages. Even in EVM land where things are standardized, you can't even get cross-chain. I'm counting it layer 2 to layer 1 consistency correct because the execution environments differ, and so they like you get this kind of like weird thing where like yeah, technically they're supposed to be running the same execution environment, but like the data availability is different and like the transfer notions are somewhat different. And I only think that's harder in a world of like many languages. So that would be my bull case for like one language winning them all is like if in the one language winning them all case you still can't get consistency perfectly, like how do you hope in like language translation? Because like that is a really hard problem in sort of computer science in general.
No, it's definitely true. It's definitely true. But I mean, look, even if there are multiple languages, there aren't going to be that many. So I can believe that, like, look, there will be 3 or 4, maybe 5, but I doubt there are going to be 12 major languages that define, the major blockchains of the day. So one way or another, even if you have to deal with pairwise translation, it's not going to be that many that you have to fundamentally solve. So I think it's doable in the long run, but there's a lot of wood to chop to get there. Okay, so the last thing I wanted to discuss today, so our favorite topic on the chopping block is regulation, as we all know. And so there was a big bill that was dropped just a couple days ago by Cynthia Loomis and Kirsten Gillibrand, and it's kind of a landmark bill. We haven't really seen a lot of legible proposals for legislation in the U.S. that are actually fully define a framework under which digital assets can be regulated, and that's what this is. And it's also bipartisan, which is pretty unique because usually crypto is like, oh, the right thinks this, left thinks this, blah blah blah, and you can never really get anywhere. So I'll give you guys a highlight. I assume we were at consensus when a lot of this dropped, so I have to imagine most of us haven't gotten super deep. But here are the highlights. First, sales of crypto that are less than $200 are tax free. So if finally you can use your Bitcoin to buy coffee.
This is
and
so bullish
don't
for
have
all
a
these
tax
tornado
realization.
cash people who are pulling out like very tiny amounts of money.
Wait, who's doing that? Can't you even do that with gas fees?
With gas, yeah.
Yeah, well, the tornado deployed elsewhere, I guess. But
Okay, yeah, on, like,
if you look at
Polygon
the
or something.
buckets you have that you can deposit, people oftentimes do like multi-withdraw at really small size and single
Oh, I see.
transaction.
I assume the people using Tornado are not the people worried about the taxation. right
Yeah,
now.
something tells me they're probably not paying their share
I was
on
saying
Sam.
ironically.
Okay. They're probably tax loss harvesting is what they're doing. Okay, so let's go. So there's a de minimis exemption for taxes. CFTC will be the primary regulator of crypto spot markets,
which is
so
pretty good.
which is great. I mean, Gensler obviously doesn't like us, so CFTC is a lot better. Crypto securities and commodities would be more clearly defined, which would put most crypto assets as commodities. So crypto securities are things that like pay a dividend or are like more like equity like, or they, whatever. Most L1 tokens would be very clearly crypto commodities, and crypto commodities would be regulated by the CFTC. So,
Arguably, though, the L1 token is putting off some yield, is paying dividend.
well,
And
it's
you're
a
also locked up
complicated.
for an epoch.
It's
Tarun.
definitely a complicated basket.
We're reading the bill.
Yeah, no, but they don't pay dividends. They don't pay dividends. What L1 pays dividends?
Well, staking yield looks pretty
Staking
close.
looks like
No,
that.
no,
You're
no, no,
also
no, no,
locked
no.
up. You're also paid later. Like
No. I mean, like, look, you can get paid yield for doing work for anything, right? You can get paid yield for dollars. That doesn't make it. That's not getting paid dividends.
dividends.
Like in and of itself, ETH does not generate dividends. You can enter into a relationship with the protocol for which the protocol will pay you. That is definitely different than
I
getting paid
think
dividends
it's
automatically.
different when the underlying asset in the case of proof of work stuff is energy / compute power versus like, oh, I'm just providing more of the asset to get
Tarun,
that.
I
please
agree
toe
that-
the party
No,
line.
yeah.
Yeah, okay.
I know.
okay,
It's
fine,
not
fine,
even.
fine,
I'm not
fine,
even.
fine.
I'm just saying, like, objectively, I think you're wrong.
All right.
Yeah,
think you're also
I
wrong.
agree. Here's why it's not a dividend. It would be a dividend if all Ether holders got more.
Correct.
Don't tell
Because
them
even
that
in
EIP
proof of
15.
stake, you might only have 90% participation or 50% participation. The returns are not going to everybody. The returns are going to the active network validators, not a dividend.
Exactly. Here we
Not a
go. Here we go.
dividend.
Here we
Not
go.
fine.
Not a
Fine.
dividend.
Fine.
We're team not a dividend.
Yeah.
You guys can go hang out with Gensler.
Ether commodity. Let's go.
I'm on your team, Haseeb and Robert.
Right.
Yeah.
We got
Tarun.
Kyle. Tarun, we'll leave it to the sharks. All right, great.
Fine.
All right. Also, you guys remember this? That we had that episode with Coinbase where Coinbase was like, "Hey guys, in one of our disclosures, we're going to say that in bankruptcy, blah blah blah." People freaked out. They were like, "Oh my god, if Coinbase goes bankrupt, all of your money is gone." So there was a clarification that that's not true, and customer deposits are not, they're not reachable in a bankruptcy by creditors, and for companies that raise money in digital asset sales, those companies would be required to do biannual disclosures about the teams, the track record, what's going on, what the progress is. And these would have to be filed regularly by anybody who raises money in the US. And that actually seemed pretty reasonable to me. That seemed like, yeah, that actually seems like what we should be doing as an industry. Like now, like Masari is kind of like one of the places where that sort of thing happens, but having it be some kind of public database seems honestly pretty great.
I don't know. How many times have you used Edgar?
I've never used Edgar.
One of the world's worst databases I've ever used.
I believe. Look, it doesn't have to be Edgar. It can be Unchained or something. I'm fine with that. But so those are the high level.
Wait, there's also the DAO thing, right? Where DAOs. in the
No,
US
there was it was more that if you want to get favorable tax treatment, you have to incorporate in something. But if you're a DAO and you're not, if you don't want that, you don't have to do that.
There's also the staking yield tax policy. So for proof of stake systems like Ether, there was that like unsettled legal question where somebody sued the IRS.
Yes.
Yes.
Because
the
they,
Tezos people, right?
yeah,
Actually.
The Tezos
Um,
Baker.
basically the bill, as I understand it, says you're taxed when you sell it, not when you receive it.
Yeah. It was a huge bill. There was a bunch of other pieces in there. There was something else also about the crypto broker stuff that was introduced in a previous legislation. It's going to be clarified in this bill. There's a lot to it, but that's the high level stuff. And so it would create a ton of clarity where currently there's obviously a ton of ambiguity and you've got a lot of regulators fighting for territory. What do you guys think about the broad shape of the bill? And I guess the other question is
The
how
reg
likely do you think?
expert is.
Okay,
led
well, here we
by
go.
Robert.
Well, my personal view is that it's fantastic because it addresses some of the longest standing open questions in crypto. I don't expect the bill to just pass in its current form, but as the starting point for a conversation at like the legislative level, I think it's the best possible starting point. I'm sure like all legislation, it's going to get compromised to death. Crazy things are going to be added, removed, tweaked. If it goes through, it's not going to look anything like it is proposed today, being proposed by some of the more friendliest members of Congress.
Yeah.
But seeing that it's a bipartisan bill is like extremely promising. Right now, I mean, crypto has generally had Republican support, but seeing, a Democratic, co-sponsor who's going to bring other Democrats in, I think is extremely positive for the space. And the fact that, you see both sides like trying to create proactive legislation to answer all these open questions, and all these open questions are the root of why the SEC is focused on enforcement and not, anything else. I think it's incredibly positive. So,
Mm.
you know, I think it'll take a year to 2 years for something like this to pass potentially. I don't think it's like the immediate agenda of the administration. There's really hot burning fires that are taking people's time and attention. But if this is where the legislation that will occur starts from, I think we should all be excited.
So what's your over under on how long it takes for this thing to work through the machine?
So I'm not, a political expert. We have consultants who tell us
We
these
we
things.
uh, we uh, we also forgot to add nothing we say is political advice.
Yeah, nothing we say is political advice.
I was hoping to dish out some political advice today.
Okay,
but
Kyle, what is your
guess-
political advice?
Well,
please?
apparently I'm not allowed to share.
No,
to
he
share.
said nothing he says is political advice.
Right.
You're free
Yeah,
to
you're
give
the
any
guest. You're
political
allowed to
advice
say anything
like.
you want. We're
Yeah.
limited.
What is political advice? How do you act on political advice? Can I just tell people where they should vote?
You should tell them to run for office. I think
Okay.
that's political
That's
advice.
political advice.
Yeah.
Exercise your First Amendment rights. Go run for office.
Beautiful, beautiful. Okay, so we have no idea how long this will
I
take.
if I
basically.
if I have to put an over under out there,
You
I'd
have
say
to.
it's like 15 months.
15 months. So you think next fall is when we see something
Come
finally
on,
get passed?
this is fucking crypto. You're telling me we're not gonna make a prediction market for this? Like this is what it was. This is what the game was made for.
There will be at some point, but
I think the midterms this year are going to shed a lot of light on how it unfolds. I think frankly, like November's only 5 months away now, and the composition of both the House and Senate is going to change potentially significantly. And I think the prospects for any crypto legislation are going to change dramatically based on the outcome in November. I think, whether this is right or wrong, I think if the Republicans pick up a lot of seats, you might see the timeline for crypto legislation pulled forward, something that does have generally bipartisan support that won't get vetoed.
it's funny. Last summer, I thought the most important thing that was going to be affecting crypto prices was regulation, and now I'm like, I don't know. It almost feels like it doesn't matter.
CPI is the
relative
number
to
one
macro.
driver.
Yeah, exactly. It feels like the only thing that matters is macro, and like regulation is like, I'll be fine.
We spent a fair bit of time trying to think through this. Actually, I don't think regulation will move prices meaningfully. There's broadly speaking 3 things that can happen. The worst thing that can happen is like try and ban crypto in whatever form possible. Delist everything other than Bitcoin and Doge and Litecoin. Like is kind of like the most extreme version of that, right? I think
Litecoin got delisted, by the way, this week.
in,
That was-
in Korea,
in
Korea,
Korea,
Wait,
Korea.
why so?
because they added some privacy. Apparently, the Mimble.
Oh,
They
that's
added
right.
the
That's
Mimble.
right.
They
The
added
Mimble
Mimble
was
and
Charlie
and-
Lee
and-
only
Oh my
2 years
goodness.
late.
Oh
Oh
my
my
goodness.
god.
Yeah.
Anywho, so that's like one extreme, and this is just U.S. centric. I'm not commenting elsewhere. That's one thing that could happen. I think everyone kind of agrees that's like a sub 1% probability, like super, super unlikely. The other extreme is nothing happens. So basically, the status quo just perpetuates indefinitely. Of like, are they securities? Are they not? There's this whole song and dance with the foundations, and like the teams are mostly in the U.S. and like there's no disclosures, and just kind of like everyone just kind of keeps operating, and like I think the market generally works. There's like abuses and problems, but like the market as a whole functions. And the third option is like something in the middle, and like this bill from Senator Lummis and from Senator Gillibrand is like pretty squarely like right there, and like they're trying to say, look, we need some disclosures. Let's not make this going out IPO public process with Dodd-Frank and whatever all those other rules are that public companies have to go through. Let's reduce the disclosure requirements. Let these teams actually function and operate, where you can have a 12-person team that can like have a public token and like be okay, and like make some sensible rules around staking gains and de minimis transactions. Like, there's really not a fourth option. And if you think about the probability extremes of like the two on either end, those also seem like one of them seems extremely unlikely. The other one possibly can happen just as a function of inertia and like status quo bias. But I just generally don't think that like getting disclosure requirements that are reasonable and not too onerous, like why is that bad? Now, there's a case that the disclosure requirements are atrocious and screw everything up, but I actually don't really think that's the case. I think the higher probability outcome is they're just stupid. Like, I don't know, should Compound Labs report the same thing as Solana Labs? Is the same thing as Audius? Is the same thing as Nova Labs? Like, yeah, probably not. But like they'll be forced to conform to some common standard loosely. It'll be like annoying and kind of silly, but like that's like not that big of a deal.
I mean, the biggest question is, will the projects that are 6 hours old, conform to the same standards? And like all the things that get created over a weekend that, come out of left field, versus everything you just named
Right.
are generally venture backed, larger,
Large, yeah.
established systems.
Well, the thing that's also scary about crypto is that a lot of times things that happened over a weekend end up getting hundreds of millions of dollars
Very
and
quickly.
become larger than things that were made, 2
Yeah.
years ago.
Yeah.
So that's the thing about crypto is that because it's all software, you've got these crazy power laws that kick into place and exponential growth in short amounts of time. And it's very hard to build a very clear regulatory regime around something that behaves that way. So I look, I respect the attempt at trying to come up with a framework. And I'm sure it's going to get bastardized and corrupted over the next couple of years as people play political games with trying to figure out,
Who
put this
has
thing in
better
there, put this thing
lobbyists?
in there.
Auditors or crypto people? Like Ernst and Young.
I've heard that actually the crypto lobbies are really bad. I don't have any particular insight into this, but I've heard this a couple times now.
I have some insight here, and so the real litmus test here will be November 2022 elections, midterms. There is a growing belief in DC that crypto money is big, like much bigger than previously thought. There's a few packs out there now. Disclosure Multicoin does donate to some of those. We have donated personally. I've done it personally to Senator Lummis, Senator Gillibrand. And there's a chance that you see some really big crypto dollars hit midterms. And if that happens, then I think DC will actually become a lot more pro crypto friendly. As a
Well, so
function of
here's the
that.
claim that I've heard. The claim that I've heard, and again, I can't confirm because I don't know a damn thing about how all this stuff works from inside Washington. But what I've heard is that crypto people basically think that Washington is pay to play, and it's like the efficacy of your dollars depends a lot on how well you actually understand how the system works. And crypto people have a lot of money and very little understanding of how the system works.
That's
And so
Tech
they're
was like that. You remember when everyone used to make fun of tech companies
yeah,
for just like being bad at lobbying?
absolutely. I'm
Uh,
sure there's a learning curve.
But I feel like tech was not committed to throwing money at it as much as
That's
I
true.
feel like crypto people, the velocity of the capital flow is like way faster.
I think you're also implying too much homogeneity among crypto people. I think there is a new class of extremely sophisticated actor. I'll just ping at Highlight FTX because like Sam is in front of Congress, like I don't know, every 2 months now, and like they're talking about the CFTC about derivatives and all these things. Like they fairly obviously have an extremely sophisticated, nuanced, multi-year plan with contingencies left, right, and right, center for everything you can imagine. And like they're obviously playing the game at many levels. I'm not as close with Coinbase, but I would assume Coinbase is playing a similar game. I can't really speak for any other firms, but like that's happening. It's happening at I think what will become apparent, although it's not yet apparent, at very large dollar scale.
No, look, I believe it, and I've been advocating for like a year ago that people are way underspending on lobbying and like getting some political representation in DC. It's taken a while. Obviously, crypto's scary. So first approximation before this stuff is popular and seems kind of normal and like your kids are using it, it's really scary to have a bunch of Silicon Valley people with a bunch of money show up and say, hey, we want to get the laws changed. Like generally that doesn't tend to reflect well. And so I look, I don't know a damn thing about any of this. So I assume that this stuff will get better as people learn and they spend money and they figure out what is actually efficacious and what's not.
I mean, the real question to me though is like, how much of a negative impact was Luna and Terra on like the overall
well,
like
we do have a rule that every episode we have to talk about Terra and Alice.
well, the way I think about it is like, how much money did you have to spend to make like X units of impact in whatever political metric you care
Positive
about?
impact.
A positive
Yeah.
political impact pre-Terra and post-Terra, and what's the ratio? Like how much has changed? I actually think it has changed at
It's
least
definitely
like
changed.
5x.
5x?
I think 5x.
So you think that $1 spent before Terra was 5x more impactful than $1 spent after Terra?
I would hope that the brush is not that broad that like stablecoin things are conflated with securities things. Or
Have you
conflated
ever
with
talked to a
derivatives things.
senator? Yeah, I guess you have.
I have.
He's a proud sponsor of a couple.
I have donated to Senator Lummis and Gillibrand. I am optimistic that they will not be all. The baby will not be thrown out with bathwater.
The
Yeah.
whole Elizabeth Warren suing Pool Together, or like her
Wait, suing Pool together?
I think
Elizabeth-
one of her cronies. I
one
think.
where, yeah, well, someone who she
Yeah.
in her administration or whatever her office.
Oh,
is
I see,
the
I
one
see.
By the
suing
way,
Pool
you should donate. The guy is doing a public fundraiser. I bought one of his NFTs.
Yeah, yeah.
Pooley
Wow.
the NFT
Pooley
in
the
support
NFT.
of
That's
Pool
right, that's
Together.
right.
Yes.
The money goes to the Pool Together company who's defending the lawsuits.
Yes.
Protect DeFi.
Yes.
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 But
Right.
I just, I just generally think like the baby goes out with the bathwater, because the thing governments care about is like mainly money laundering, and like because they've done the reductio ad absurdum to that. NFTs don't give a shit about NFTs. They only care about anything that looks like money laundering, which is stable coins and like base protocol coins. They somehow maybe they'll separate them. But
I
but
think
Luna just destroyed value. See, it didn't help people. When the value goes to zero, you can't launder it anymore. It's worth nothing.
that is true. That's true.
it's true.
I
but-
think. I mean, look. We were talking about this earlier. Is that like I don't think that anybody on Capitol Hill has any idea what the hell a layer one is, much less that Luna
Yeah,
has
yeah,
anything
yeah.
to do with a
I
layer
think
one.
Kyle said the same thing to me, but
Yeah.
I just generally think I'm trying to just estimate this ratio, this like damage ratio. Which
Look,
is, like,
I think the primary the primary victims of the opprobrium that is now facing crypto is going to be on DeFi and stablecoins. I think that's
Yeah.
pretty clear, right? That
yeah.
that's the word cloud at the center of what Terra was about. And so I think it's going to be a rough year for those parties, and I think they're likely, to whatever degree this regulation or this legislation gets altered before it ends up getting passed, almost certainly it's going to find some way to flagellate anybody who's doing something that looks more like Terra.
Also, do you think fractionalized NFTs survive the? Do you think they'll?
I mean, they're so small that nobody's gonna.
I don't know though. The CFTC loves talking about them, given how
Do
small.
they?
Yes, a lot.
What's the
weirdly.
total market cap of fractionalized NFTs? Like under
100
$100
million?
Including Doge.
Oh, okay. Yeah.
Oh,
Yeah.
including Doge.
Yeah.
yeah,
It's small, but you
yeah,
know.
yeah.
But it's one of these things that regulators are like glommed onto.
Because they understand it, right? It's one of the few things in NFTs they can understand. It's like, oh, you have this big thing that you put into little pieces, and it's like, oh, I remember that. I
Yeah,
remember that.
fungibility.
Yeah, exactly.
Yes.
You
Exactly.
securitized it. We got
Yeah,
it. We
yeah.
know that word.
Yeah, exactly. I heard bad things happen once when we did that. So anyway, all right, gents. Well, we're up on time. Thank you so much, Kyle, for coming and hanging out with us. And
Thanks y'all for visiting.
yeah, this has been amazing. Signing off, everybody. Peace out.
Bye.